Is the Nashville boom coming to an end? We now have a big surge in vacant apartments in Nashville, as well as people trying to sell their homes. And this could be the signal that one of the biggest boom towns in America over the last 10 years is finally starting to crash. And the big issue in Nashville is all this new construction. They built all these luxury high rises in Nashville, and now many of them are sitting empty. There's not as many people from California and New York willing to pay $3,000, $4,000 a month for a 2-bedroom, and it's showing up in massive numbers of vacant units on the market. Folks, there's just like a new apartment community on every corner here in Nashville. And what some of these developers are now doing is they're offering 3 months free rent just to get people in these apartments. That's a 25% rental discount on a 12-month lease. And actually, when you consider the concessions, some of these studio and 1-bedrooms are getting pretty affordable. However, it seems like fewer people from New York and California are now moving into Nashville, meaning the vacancy rates are going up, and even the home prices are now starting to go down. Data on Reventure app is showing home values all around downtown Nashville are dropping on a year-over-year basis. However, I think this is a good market to buy in for the long term, so if prices continue to drop in Nashville, you might want to eventually snatch up a property. However, the values are still really expensive. We actually think values are going to drop over 7% in Nashville over the next year, and in some zip codes as much as 10%. So head to www.reventure.app to access our home price forecast for your area in Nashville under a premium plan.
Nick Gurley of Reventure Consulting, he did a 90-second short saying, is Nashville over? So I'm going to break it down point by point. He has 4 points, and we're going to look at each one. Now, the first thing he mentioned was that apartments are popping up on every corner. He's not wrong. The luxury apartment and condo markets are closely linked. And right now, Nashville's condo market is way oversupplied. Now, if we just look at the MLS for high-rise condos, there are about 223 active high-rise condo listings, while 236 closed in the past year. That's essentially a 1-year supply just from the active listings on the MLS. Now, if you look at discouraged or withdrawn sellers, these are canceled and expired, there's another 283 units that have given up in the past year. That would put us closer to a 2-year supply. However, if we also factor in the developments like Pullman, Emory, and now Prime converting to condos, adding 600 to 1,000 units of supply that's also not listed, we're looking at potentially a 3-year supply, maybe even higher, of high-rise condo inventory in downtown Nashville. This, if there's an area that could crash, it's here. Condos have already dropped 15% when we look at price per foot over the last 2 years, but I don't feel like there's really high stress even there yet. Now, it is interesting that he does make the transition from condos to predicting a 10% drop in Davidson County. Look, you could build 1 million condos in downtown Nashville. The buyer pool is completely different for single families. Ask somebody looking for a house, would you take a condo for free if you had to maintain it and pay the HOA? Chances are they're just looking for a single family home. They'd say no. However, when you look at supply and you look at price cuts, there's plenty of reasons to make you think that the market might go down. And I will give you a deeper dive into some county level data towards the end of this video. Now, the next point he makes on immigration, there's no evidence of a reversal of California and New York happening, not from Nashville at least. Now, there is a case to be made about foreign-born workers and what's happening there. I'm going to talk about that in a different video. But look, I talk to people all the time from California, Chicago, New York, Atlanta, Florida, Phoenix, international. Nashville's airport is hitting record highs, and the relatively small population we have means that just a small influx from these areas is pushing up demand. Amazon has pulled people towards Nashville. We've got Asurion. We have plenty of other companies that are pulling people into the return to office, pulling them into Nashville. CoStar is showing that 10,000 additional renters have stepped up in the multifamily market this year. This was a quarter of that during the lows of 2022. Even Zillow is showing that single family rent in the Nashville market is headed up, even though multifamily market is showing that rents have been dropping. This all suggests that all the vacancies that Nick is pointing out really has to do with the massive supply that was built versus a demand side reverse migration or a massive drop in migration. I just don't see it as being a risk or a reverse migration. However, he does talk about Davidson County being the weak spot in Metro Nashville, and he's not wrong. Davidson's softness is clear, but even Nick is bullish long term on Nashville.
However, I think this is a good market to buy in for the long term. So if prices continue to drop in Nashville, you might want to eventually snatch up a property.
If home prices were to drop 10%, what does that even mean? Every home doesn't drop in 10% in value. You would actually have some that don't drop at all, while others that drop much more. And I think it's important to realize this because this month, I have two buyers at the same price point, $700,000. One bought at a record high and another bought at a 30% discount from where the property appraised 2 years ago. Broad predictions like a 10% drop it oversimplify the things you need to focus on, neighborhoods and hyperlocal, as well as the macro. That's why I have the neighborhood tracker, which can show you the direction of prices by plotting every single transaction in that neighborhood, in that area, and even filter on specifics like size or property type. So even if Zillow's real-time data shows that there's a 1% drop that's happened, it's not uniform. These drops in home values should only serve as a way to set expectations as you go into a market to buy or to sell. If home prices are dropping, sellers should be patient. They may have to list a little lower than they thought, and it might not happen as quick as they want to. Let's take a look at some data that I worked with my friend Claude and Grok to make. Let's start with Davidson County, where he's most bearish. Believe it or not, the median price, $520, is basically flat to last year. However, if you do look at price per foot, it's down about 1%. Very similar to what Zillow is saying. Metro Nashville is down. Now, contract volume is higher, and it's been higher here for the past couple months. Active listings are massively higher, with 3,100, almost 700 higher than last year's 24-21. Active listings may have peaked early this year. Now, shocker here, Williamson County, median price is $989, up from $950 last year. Contract volume is up massively, with 375 under contract in the last month. That's up from 285 last year. That's a shocking jump, and active listings are high, but well below their peak in July. Now, one outlier here is Wilson County. This is where Mount Juliet and Lebanon are. Active listings are up 831 versus last year's 606, but it's one of the few counties seeing inventory continuing to grow, which is an interesting development. Now, if you know why inventory is growing in Wilson County, I'd love to hear it. Are these new builds, new developments, stressed sellers? You tell me. Davidson County is soft, but it sits above the median price and it's experiencing higher demand. We also see this in Williamson County. This in and of itself would create a mix issue that would push up the median price, while Zillow will continue to report soft or falling home prices for the rest of the year. Single-family homes aren't crashing, but they are softer. And if you want some daily updated charts, check out my website, NashvilleRealEstateData.com, for daily updates on listings, contract volume, sales price, and price cuts. Now, Nick's bearish take focuses on apartments and condos, but single-family homes they're holding so much better. In fact, in a lot of places, price per foot is still higher than where it was last year, and even contract price per foot is too. We're in a buyer's market, so if you are a buyer, I will tell you, it's not easy everywhere, but this is the best market I've personally seen in terms of being able to look at a house, not feel rushed, think about it, make the offer that's right for you. But it's not everywhere. There are still a lot of unserious sellers. In fact, I talked to one yesterday. So whether you choose to buy or hold off and wait, keep renting or explore a move, just stick to your budget, stay patient, and best of luck out there. And with that, I hope you have an amazing weekend. Thanks for watching. Have a good week.